Um, Welcome back on this topic. This is the beginning of our advanced training, an introduction and the basic knowledge you need to know before you become a good and a profitable trader in the Forex. There are some certain things that you need to understand as a beginner or as a trader who have been making stories of loss in your trading skill. And these things matters a lot. If you don't know this, you are doomed to keep failing every time you place your trade in the forex market. Many people think that the forex market is just an illusion or something that have to do with get rich quick. Like I said in the early stage of our class, that forex is a skill, just like the same way you brought out time in your mind and go through the university to study law for 6-7 years. You went to law school. The same way that you can also learn forex. But one thing with forex is that forex is the only skill in the world that while you are still learning, you can actually be making money with it, because it have the largest volume of income that flow in and out of it every day. As of 2006, the total volume of money that's coming out in and out of forex was $6 trillion, which if America, New York, and Asia join together in 10 years do not make what forex make in a day. Okay, and as time keep going, people keep discovering forex, people keep seeing the need of joining the forex market. The volume of income begin to increase every blessed day, because the more new people are coming and the more new people are dropping out because they refuse to pass through the foundational process of forex. They thought that forex is just like any other online business whereby they can just, oh, I heard this business, I'm doing it. No, forex is a skill because it comprises all profession in it. You can either be a crude trader, like I've said, with the forex market, every asset is inside. You can trade crude, you can trade gold, you can trade gas, you can trade shares, Facebook, everything that we are dealing with the real life. As far as people are buying goods from one country to another, as far as Nigeria is buying byproduct from Western world and the Asian world, as far as Asians are buying raw product from Africa, as far as people are buying clothes, importing it from their own country to another country, this is what we call forex. So people think forex is something that, I think normal online business. No, forex came just like you are operating an offline business, like you own a shop offline, and then there comes a need that internet came in and people are needing to stay in their comfort zone to buy products or goods and services. Then you now call a website designer to create a website so that people can order goods. This is the same thing with forex. Forex is not an online platform. Forex has been in existence before any other business in Nigeria, in Africa, in the world. After marriage, forex is the second one, because trade by barters have to do with buying with what you have, giving somebody what you have to get what you want. From there, like I've said in the history. So now, before you go into the market as a forex trader, after you must have known different things about candlesticks and what, we will still repeat all those things. Then first thing is, where is the market going? That is the primary need, the primary direction of the market. Is the market going up? Is the market going down? This is what you need to understand. If you don't know where the market is heading, how will you know where to enter? When you are going, like now, you enter motor, you before you go into the market or before you travel, you must know where you are going. Even if you don't know where you are going, you go to park and say, I want to go to Lagos. You pay for the transport for the Lagos, and then you know where to enter in the bus stop, because First thing, you want to know where you are going. You are in your house, it's okay, there is need to go to Lagos to go and buy something, to go and see loved ones, to go and see my friends or anybody. At the end of the day, you have to gather the money and then you prepare yourself. That during the preparation, you have already known where the park is. So when you get to the park, what do? You meet the driver, you pay your money. The process of paying your money, you believe that the driver know the way to Lagos. The same thing in the forex market. If you just come into, you saw a candlestick, maybe you saw motor flying on the highway, you say, oh, stop, I'm going to Lagos. No, it's not done like that. You must go to the park, you must register your name, you must fill in the form so that they will know who is your next of kin. In case of anything happen, they can be able to call your loved ones. Okay, so the same thing with the forex, the primary direction of the forex. So let me go to a live chart. Let me show you what I mean. Are you seeing the chart? Respond. Are you seeing the chart?
Yes, sir.
Okay. Now, I want to, you can mute yourself. I want to know the direction of this market. Like I've said, we have different time frames here. Maybe I want to trade, like I said, if you go through the menu of the MetaTrader, I explain all those things. Now, before I enter the market, it all depends on the time frame I'm using. Let's say I'm using 4 hours, and I said in every 4 hours, each candle form within 4 hours. It does not form below 4 hours. If you put 1 hour now, let's say this is a candle now. Every candle, depend whether this is the this tiny candle, whether this long huge candle, this particular candle, all of them form within 4 hours. It's still the same thing. Some people, you will see them, they are all the same age grade, and some are tall, some are short, some are slim, some are fat, some are dwarf. So it all depends, but they are all in the same age range. Every candle here, this candle formed in 4 hours. Within 4 hours, this is the body of, this is the shape it got. The same 4 hours, this one formed, this long one formed. The same 4 hours, this one formed. There is even tiny one. They all form the same 4 hours. So every candle here is formed in 4 hours time frame. But I cannot just say, yes, it's necessary you know the time frame. If you pick 1 hour, that means every candle in this 1 hour form within 1 hour, whether be it tiny candle, whether, so it all depends on the time frame you are trading. If you're a day trader, you focus on 1 hour and 30 minutes. But your daily view, the longer view, you should use daily time frame to view the longer direction of the market. Then to enter, you can use 1 hour or 30 minutes to see where to enter. Now, but before we go into the market, and maybe today is Tuesday, and I want to know where the market is going. First of all, I will come here. This is where they call zoom out, zoom in. I will zoom to the final stage. When I zoom to the final stage, I want to know where the market is going. Where is this market going? I will start from here. This is where the market, because this low has been broken, which I will teach you later. Now, currently, the market was going up, but suddenly, currently now, market is heading down. Okay, market is heading down, and also here now, market is going down. This is it. Here is market is going down. Okay, since market is going down now, you need to zoom in to see the candlestick. So after you must have zoomed the final stage of zoom out to see where the market is heading, you now do 1, 2, okay, so that you see what you are seeing. You see the candlestick clearer. Now that you have seen that the market currently is a downtrend from here, because this is the last high that made since, and there have not been any high that has broken this particular high. Therefore, all this while market has been going down since this high was made. And this low, this is the low that created this high. This low. If this low has been broken, that means it's a downtrend. So let's see if there is the low has been broken. It has already been broken. Okay, so it's a down trend already. But now she will now look at where do you enter. Let's go to the slide again. Now, you remember for you to say that we have a trend, it means that I'm discussing on number 2. Number 1, you need to know where the market is going. Number 2, you need to know what formed the trend. Don't forget that it is the candlesticks that form the trend. One candlestick cannot make a trend. It is when there are many that you now say, oh, this is a trend. One candlestick cannot make that's why I say one tree doesn't make a forest. It is when we have many trees, be whether they form one or huge one or fat one or slim one or tall one, or we all join together to make a forex. Without the joining together of this candle, you cannot see any trend. So it is the repetition of candles that keep forming based on the past data that will now gather to form a trend and tell you, oh, this is a downtrend, because so many candles are formed and keep going up. All those candles were going in one direction, despite that there was a pullback, there was a uptrend. But if you look at it in a very longer direction, let's say this is an uptrend here. This is up, down, up, down, up, down, up. Okay. Now, although there is down in this direction, but the main original direction is that price keep going up even when there is down. That means all this swing that I am drawing, it is candlesticks that make up all this trend, these swing lines that I am drawing. So without the candlestick, without the bar chart, you will not be able to know where the market is going, without the line shine also. So now you need to know what make up a trend. Don't forget, what make up a trend is candlesticks. Candlesticks are what make up a trend. Let's go to our chart. Now, if you look clearly, you will see that if I zoom out, then we can see that this is a downtrend. But when you zoom in 2 times, you will now see that it is candlestick that make up this trend. Without all this candlestick forming, how will you know that the market is in a downtrend? Because it's candlesticks that keep falling. Yes, look at it now. Like what I said, there is an uptrend here. Remember, I told you that if you want to draw your trend line, you must use period separator. And your period separator, you should click Control Y. Control Y. This is called period separator. Why did they call it period separator? Period separator is separating every event that happened in a particular period. Let's say you are using daily time frame. It means that all this while from here to here, this one is 1 month. 24 candles, 25 or 30, 25 candles make 1 month. So now if you look, this line here from here to here is 1 month. That means in the last past 1 month, from here to here, price fell down to this point. That means what make up now, if you say this is a swing, if you call here a swing, the other month price rise from here to this place. Are you seeing it? This is the highest level. Then the other month price fell from here to here. Are you seeing that? Okay, to this place. Then The recent month again, this month, price rise, but it did not rise above this previous month. Okay, it did not rise above this previous month. Therefore, since price did not rise above this month, you will not say that if price did not rise above this previous month, sorry, I'm coming. Let me draw this thing. Now, within this level, this is the lowest here. Okay, that shows that price broke the previous low. This is the low, and the market move. Even when it opened, it keep breaking, it break down to this level and then make a move. And we were expecting that this top, this particular high will be higher than this one, but it did not. Once a high failed to go higher than the previous one, or once a low fails to go lower than the previous one, a trend has ended. But we are coming to that. What we are discussing here is that this swing you are seeing, this line you are seeing, this trend line you are seeing here, it is a makeup of a makeup of candlesticks. Be it tiny candle, be it fat candle, whether buying candle, whether downtrend candle, it is the joining of all this candle that you can now, at the end of the day, you now look at it and say this is a downtrend, because there are more selling candle in this trend than buying candle. That was why there is a major push down to this level. Within this swing now, it doesn't mean that we don't have buying candle. No, we also have, look at the buying candle. See the buying candle here, this one. You see the buying candle here. But what we are saying is that people that have more strength in the market, we are the people, because the market was originally here. But how come it now fell down to this level? Because the sellers are more in this swing than the buyers. That was why the candle fell down to this level. So the buyers struggle again to push the market, thinking they can push it to this place, but they did not have enough strength to do that. So now, in a very downtrend or uptrend, when you say the market is in a downtrend, it means that there are more sellers in the market, people that are willing to drag price down. And these people that are willing to drag price will never give space to people that want to take the price up. So they keep dragging the price down. And there are more sellers in the market than the buyers. So each of this candle that I formed now was formed in a day. That means let's say the other day, market sold. And within this candle, now if you go down to 4 hours time frame, you will see that it is also a trend of its own. This candle you are seeing, you see this candle, each of this candle, this is a daily candle. Inside daily candle now, there is 4 hours candle. Let me give you an example now. Let me zoom in. You see this candle, this one. I will draw a line with this candle. Wait, let me use the most recent one. Okay, now this is this one. I'm going to use this. Don't forget, this is the daily time frame candle. This candle that looks short, this particular candle that looks short. Okay, look at it. Let me go to 1 hour so that you see that it is a downtrend coming. And this 1 hour, so many candle has formed that make that daily candle that you see is only one candle. Look at it. Look at it here. You see this candle? See the candle here. You see this candle that fell down. That small tiny candle that you saw in a daily time frame. This is it here. If you shake it in 30 minutes, it's a trend of its own. Look at it from here. Do you see that? It's a trend of its own. Well, look at it in daily time frame. It's only one candle. Look at it. Are you seeing that? So, are you seeing it? You see what I'm telling you? That candlestick that is only one. If you go to lower time frame, you see that it's just a very small candle within a buying candle. So if you now say, oh, market is selling because of this candle, look at all these daily time frame, and all this candle you are seeing here, were formed. Okay, look at this one now. If this particular, the next candle now, this one is a buying candle. Let's go to 30 minutes again. So do you see why I said you can use daily time frame to view the market, but use lower time frame to check where to enter if you are a day trader? Now look at that tiny candle that is a selling candle. This is it. Then the next candle that followed it was a buying candle. This buying candle. Look at it. I will draw it now. From here to here. That is why you need period separator. If you don't use this, how will I know that all this place from year to year was a daily candle? Is the way with the help of the period separator, I can be able to tell you that this candlestick from year to year was 1 day. Because 30 minutes, how many 30 minutes that make up 1 day? If you calculate it, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49. 49 30 minutes make 1 day. So if you see now, within this is daily time, this is full 30 minutes, but it covers the full activities of daily 24 hours trade in 30 minutes. So it's 40 30 minutes that make up. So let's check it now. You see daily time frame, see what will happen. See that candle that I draw now. There is a candle. This particular one. That is the one I just draw. This one is that one that sold. This is the one I saw. So with the help of daily, when you look at it in a daily time frame, you see that a selling candle, let's say, hey, this candle is selling. Like today, market sold, market bought, market made a move. That was why, look at this particular candle here. Like now, this particular candle made a sell. There was a sell here. Now, that was why. But if you look at this current candle, today's candle now, let's check 30 minutes. You see what I mean. Once it knock 12 night to complete full day, another day will start. Look at it here. So market sold to this point and rise and then open here. Now, from today, market rise from here. It went to this high. Okay, and pull back. See this pullback here. See this pullback here. This place here. That is that place that market that you will be seen as a swing, like a shadow, a tiny shadow. I've thought if you go to that basic class, you see what I mean. Now look at what happened now. The market pull back. Now let's check it on a daily time frame. The daily time frame is for longer view to see exactly what the market is doing. But if you look very well, you see what happened here. Do you see this candle now? The market got to this. This is the highest point the market got to. But we are looking at where the market will close. So that is why you are seeing that pullback there. If you also check on a weekly time frame, it has another view. It has another view. Don't forget, each of this candle is daily. That means inside this daily, there is 4 hours. There is 1 hour. There is 30 minutes, there is 5 minutes, there is 15 minutes and 1 minute. If you take weekly now, if you look at this weekly now, inside this weekly, there is daily. That means you need 25 days. So you need 7 days to make 1 week, which is, it counts 5 days to make 1 week, as far as Forex is concerned. But normally it is 7 days. But you can see now inside this weekly, there is daily, there is 4 hours. So it is the higher, if you, maybe it depends on the kind of trader that you are. What I am trying to say here is that in a trend line, in a trend, what make up a trend is the formation of many candlesticks. Okay, that is what make up a trend. A trend is made up by the formation of candlesticks. That is why it is stated here that Look at it. It says, one candlestick cannot make a trend. That is a parable. One tree doesn't make a forest. What makes a forest? It is many candlesticks. And this candlestick is decision of the action and decision of people activities in the forex market. Now, another thing is repetition pattern. In the forex market, market moves in repetition. It goes up, it comes down. It goes up, it comes down. It goes up. When it gets tired, it will do a U-turn and start selling. When it gets tired, it will do a U-turn and start buying. Because that is the normal behavior of humanity. That is normal behavior of people. Every day we wake up, we bath, we eat, we now go to work. The next day we wake up, we bath, we eat, we now go to work. We keep doing it from generation to generation. Market has been going up, coming down, based on activities of humanity. There must be war, there must be problem, there must be good, there must be bad. That is the way life is all about. Let's look at it in the charts in the market. When you say market goes up, keep going up, keep coming down. Now look at it now. You see, market has been, if I start from back, if I go back, you see that the market has been doing repetition. Let's say from here now, market has been doing what? Rise and fall. It rise, it fall, it rise, it fall, it rise, it fall, it rise, it fall, it rise, it fall. But when you look at it in a longer time frame, you see that the market has been rising for a very long time now. It started again. It fall, it rise, it fall. In a downtrend, it rise, it fall. That is it. It keeps going. That is called repetition, cycle. Life is in a cycle. Your father gave birth to you. You must give birth to your another child. Another child must give birth to another child. Another child must give birth to, keeping it in cycle to sustain till the end of time. I don't know if you are getting it. So market moves in cycle. It goes up, it comes down. It goes up, it comes down. It goes up, it comes down. So it's in a cycle. Okay. So I believe you have gotten this one now. The next one is flow like ocean. The market flow like ocean. When you say flow, if you have studied the ocean, you see that it moves in waves. The market moves in waves. So you should know where the market, it moves like this. And if you don't know how ocean moves, go to YouTube and say, how does ocean move? What is called ocean wave? You see, it moves like Indomie. Chiki, 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 chiki. It will go. But if you have been in an ocean, you see that the market, the ocean moves in and out. It will just flow down and then flow in. That is how the market moves. So if you know how this market, if you know that the market, is time for this market to move back to the ocean, you follow it now. You follow it and move. You know, people that if you watch all those guys that used to paddle with ocean, they what do they call it? They used to use their distance. They will be flowing with the ocean. They will be flowing with the ocean. That is the same thing. If you know how to flow with the ocean, you don't have the problem. You don't have the problem in your trading skill. But if you don't know, you keep losing. And that is why people are told that learn how to flow with the market. If you know how to flow with the market, police will become your friend. If you don't know how to flow with the market, police will never be your friend. So you must learn it. First thing, if you want to do any business, you must know how the business works. Yes, Mr. A is doing well with the business and you love the business. You don't just say, oh, because Mr. A opened the business. Before Mr. A opened the business and start doing very well in that business, he must have passed through the training. He must have gotten experience. But you, because you are seeing the final product of Mr. A, you just jump in and you don't know how to paddle the sea. You don't know how to use your own wave paddle, those skates that people use on their ocean riding. You don't know how to do it. In the ocean, you will be drowned. That is the truth. Yes, it's fun doing it, but you need to be trained. You will need to start with swimming pool, where when you fall, you need someone that has done it, has become a pro in the business, and then the person will now guide you. Then he will not take you to a lesser. When you start, you can start with the edge of the ocean where the mouth. Then before you now can think of entering the main deep, because you must know how to swim. You must know how to swim. You must know how to swim in case you miss your way. You can as well come back to the land than for you to say, this guy is doing this, I can do it. No. You must know how to do this thing. If you don't know how to do it, you will come out a frustrated man. There are two types of traders: those that are gambling. Those that gamble are people that refuse to go through the knowledge. They want to, oh, Mr. A is doing well, he made 50,000, and those people that will be showing you final products of the day. Oh, this interview trade, hey, no see him trade, hey, Jesus. You follow him. You fund money. That money you would have paid somebody to teach you how to trade. You go and throw it in the market, and somebody that have gone through experience, training, have a mentor, take it from you. You do it again, you lose. You do it again, the next thing you say Forex is a scam, because you refuse to pass through the process. That is it. So the Forex market is an ocean. Look at it. Let me share the screen so that you see. Share it in a live. See, don't you see that as the market has been flowing, all this while, market has been flowing up. It has flowed up. Now it's time to go down. If you know when the market is about to, if that you enter here and start selling, and the market is flowing. Look at, you have made a lot of profit. It went up again and then do a flow. From here, assuming you started with $100, and by the time you got to this way, you must have made like $10,000 with $100. When you know how to flow with the market. If you don't know how to flow with market, how will you know when the market is about to flow up and flow down? Because the main aim for you to be in the market is to follow the direction of the market. You are not the one that will control the market, turn the market to move in your own is to follow the trend, follow the big boys. Who are the big boys? Like I tell you, market participants, the major market participants, the main people that control the market are the big banks, the big companies, the big boys, people that have huge money in the market, that once they put their money, they want to go down, they can push the market at least 5-10 pips before for the market to go down. These big boys are the ones that you follow in their back, follow them like a, because you have tiny money. Remember, the brokers are the ones that make the Forex market accessible by me and you. If not the broker, you and I cannot afford to trade the Forex market. If you remember initial stage of the Forex market, it was designed for the big boys, the government, the central bank, the people that owns up to $1 million in the market. But since you don't have the market, the broker came as a middleman. He collected loans from the bank so that he can give you an edge to be able to access the Forex market. Okay, so you must learn to follow the banks, the companies, the people that own the huge fund. Follow them as they are going down. You follow them and be collecting the shaft. That is what we are doing. If in a day the Forex market controls not less than 10 trillion, and every day you are collecting $200, $300, depending on your capital, $400, $1,000, $2,000, $10,000, it's something. The big boys are the one collecting the billions of dollars, but the small, as far as you follow them, they follow them. Follow who no road. If you know how to follow people who no road in the Forex market, you don't have problem. But you must learn how to follow the people that knows road. If you don't follow them, how will you be able to know who know road? You see, So this business is very good. It's just that if you don't know how to follow no road, you get problem with it. Okay. So the next topic here is the next one we are going to move into. We have discussed on this particular one. Then let's talk about how many types of Forex direction do we have? Okay, now we end here. We have 3 types of Forex direction, which I've already taught in the basic class, in the intermediate initial stage. Remember technical analysis and all those stuff, and I discussed about it. There are 3 types of trend direction. We have uptrend, which is this. This is it. Are you seeing that? We have downtrend, which is the downtrend. This is it. In this downtrend, remember what I said. A trend is made up a formation of so many candles. So many candles might be a formation of so many, which have the major either or the buying candle. When you say this is an uptrend, it means that the major candle that have more momentum in this trend are buyers. That was why you call it uptrend, because they, even despite that the sellers come out, this red one are the sellers, but the buyers are more in this uptrend. That's why you call uptrend. You can also call it bearish direction. That is bullish direction. That is bullish or uptrend. Okay. Then this one is called downtrend. Downtrend is a trend direction, but the major people that control downtrend are the sellers, because that is why it is called downtrend. Then ranging direction is, ranging direction is when you say that the market, the buyers and sellers are negotiating. Now, market, let's give an example here. This market has been going up, been going down. Sunday, the market got to this space, Abi, then there is range like this. This range is a discussion between the buyers and sellers, saying who is going to be in charge. By the time they keep dragging, that's why sometimes you see market will be ranging. Sometimes it might range for 1 week, it might range for 1 month, it might range for 1 year. But once there is a settlement that so who take over, and the buyers are more, which is if there are more buyers in the market, the buyers will take over. That is why the market made a little bit pull down, and the buyers say no, you cannot go beyond this level. Look at they were dragging price. Market went down, market went up, market went down, market went up, market went down. And there the buyers. The buyers got angry and pushed the market. Look at where they push it to. So ranging is called an indecision level. If you don't know how to trade range, just get off. You should just know when to buy. That is why it's a market flow in repetition form. Look at it. It went up. Look at it. It went up. It come down. That is repetition. Then what make up a trend is candlestick. That is why I say markets can, a trend does, what make up a trend is the formation of different candles that make a trend. Okay, then now what make up this uptrend is formation of bullish candle, more of bullish candle that make up, because there are more bullish candle than bearish candle. You know bullish, you know bearish. Okay, so now we have uptrend, we have downtrend. Now, what make up a valid uptrend? Now, let's talk about uptrend. When you say that a market is an uptrend, there should be what we call higher lows and higher highs. When you say this is uptrend 1, okay, let me draw like this. Then this is a downtrend 1. Okay. Now, when you say you cannot go from here to here, then you can say a valid uptrend, because this is called, this is This is called higher highs and high. Don't forget, let me draw again. I will start from here. Okay. You see, there is a repetition here. The market is always moving in a repetition from now. Now let's stay from here. This is a downtrend, and this, let's say here, uptrend started from here. Okay, watch out. When we have, this is called high. Are you seeing that? This is called, sorry, I'm coming. I want to do something. I want to start. Okay, now the uptrend, the downtrend started like this. Okay, now don't forget, this is a high. This one is a high, but this particular high is higher than this high. So that is called, this one is called higher high, 2H. This is a low, but this particular low is higher than this. So you call it higher low. When there is what we call higher lows, a valid uptrend has been established. Now, if this high has formed, you wait for another higher low. If this higher low has finished forming and start coming up, you can then set your entry here for a buy. The same thing here. This is when uptrend was going up, okay? Are you seeing that? Now, this particular uptrend started here, which is the same thing here. This is an uptrend too. But when it ended here, what happened here? I was expecting this high to be higher than it, just like a step. This high is higher than this, higher than this. This high is higher than that's it. You say that's called a valid uptrend. But I was expecting this high to be higher than this one. But for this high, for this particular recent high to be lower than this one, that means something is wrong somewhere. That means there is no more uptrend again. But now it now makes, this is called high. Okay, this is called lower high, lower high. But I need to confirm until when there is a lower low, just like this one. When we have higher, this is high, this is higher high. Until when higher low form and start coming up towards the previous higher high, then I can set my entry. Market will now pick me and keep going up. The same thing happens here. Market has been going up successfully here, and suddenly this high refused to go higher than this one. And then now make what we call lower highs. I will need to wait for lower lows. So the first thing now, this is, but in this scenario, the first low that used to form, the first one that used to form is sometimes it's a breaker, which is lower low. And once you make higher, lower high, which is this lower high, because I'm coming. Okay, now let me draw it again. Now, this is a low, this is a lower high. Yes, the first one I used to fall is low, then it will form a lower, keep going, keep going, keep going, keep going. Come on, do this, okay? Now, first thing, it went down as usual, like it used to go down here. The second thing, I'm expecting this swing to make a move like this, upper again, and keep, you understand, progressive. But it did not. I'm coming, let me clean it up. It did not. What happened is that this low now refused to go higher than this. There is what we call a downtrend has been. So now we have low. This is called low. Then this is called higher, lower high. Okay, this is called lower high because this low refused to go higher than this. So a downtrend has been established. As this lower high keep coming down, you come here and set your sell entry. Here become your stop loss. That previous high that refused to, that top, this place now become your stop loss, and here will become your take profit, your entry point. Sorry. The same thing happened here. So when you say there is an uptrend is according to Dow, we'll come to that. Dow says that for you to say that there is an established uptrend, there must be what we call higher highs and higher lows. Once that has been established, then you can officially proclaim that an uptrend has been established. The same thing, for you to say that there is a downtrend, according to Dow theory, it says that for you to say that there is a downtrend, there must be an establishment of lower highs and lower lows. Then you can then officially declare that as a downtrend. The same thing that happens here. So within this level here, I can say that from market has been going up from here, coming, you see, it keep going up like that. Then when it came here, this up, I was expecting this top to be higher than this top. But what happened? Market went down from here and then failed to go higher than this previous one and went down again. That is it, kept going down. So let's go to our live chart so that I can show you what I meant. Let me clean off all these things. Okay. So now you can see, let's look at what this is what I mean. Let's say that from here to here was an uptrend. Okay, let me use a clear view. They are the same, but I need to start with something. Remember, if you want to draw your trend line, you should use your period separator, control Y, so that you can now say this is from here to here has been an uptrend. Okay, then the downtrend from here to here, downtrend, from this place to this place, uptrend, then from here to this place is downtrend. So that is why you need period separator. So within that period separator, you should be drawing the most significant high within that level. Sometimes the high might be higher, might pop off to the next period. Let's say from here now. I want to draw my trend. I start from here. Okay. This is another period. This period is what, 4 hours. This is another, last month, the month, market went down and then it pulled up to this level and opened and fell to this level. Okay. This is the other, this weekend, another month. Then it now rise to this level. I'm drawing it within the period. You don't say candlestick, no, use period to separate them. It went down to this. This is within this month, the market, when this is the lowest market went, and this is the highest the market went. Then it bounced out, it was going down before it now break into the next month. Then you draw from that your swing from this month to the next month, which is this month, another new month again. And within this month, this is the lowest price the market has fallen to, and this is the highest. Now, if the last month, now, if you can look vividly, market has been falling. Let me start from here. if you see clearly, market has been right, market was up and start falling from this, it fell down to this period. You can see how I am drawing my line, my trend line within a period. So if you don't know how to use the period to draw your trend line, you have issues. So you must always insert your period. It doesn't matter the time frame. Make sure your trend line is within a period. This line is what separates, tell you that this from here to here was last month. From here to here was a new month. From here to here was a remove. So now with this, now you can now say, oh, last month market went down. Market fell from so price and fell to this price. Let's say dollar rise from so price to this price. Naira fell down. This is what I'm trying to show you. Then you now come again and says from here, market fell down to this point. Because do you know why you drag this swing to here? Because there is no pullback. There is no pullback within this level. So you take your swing. Let me delete this one. I will now take my swing from here. There is no valid swing. So there only the pullback. So that means market fell down and keep falling down, fell down to this place, to the new month, and then went up to this place, and then fell another down again. Okay. When it fell down this place, what again? It now rise up again. Now, remember, all this while market has been going up. So what are we looking for? We are looking for higher highs and higher lows. So this is a high. Don't forget, this is a high of the falling market. We expect this high to do like this, to fall down and make a move and keep going down, okay? But it refused. The next high now passed this one and went and form what we call higher highs. Then this low became the low, the last low within this trend. And another low now formed, but this new low that formed was higher than this particular low. So it now become higher low. So when you said we have an uptrend, it is when the market starts rising, you can then set your entry here. Okay, so but there are different strategies you can use to enter early. You can as well enter here. Remember the candlestick reversal pattern I taught. I say if you see this kind of thing happen, you can enter early. When you see a reversal candlestick within this place, you then check for the next candle and enter. Somebody that is waiting for here to enter, before the person will get to, before the price will come and pick this person here, you must have made a lot of profit. Okay, so we are stopping this class here. Now I will give you assignment. Assignment is you are going to submit the assignment this weekend, this Friday, when we are coming on a new class. Your assignment is draw a valid trend line using a period separator. Draw your valid trend line using a period separator, and based on what I have taught you, you tell me what you need to know before you go into the forex market. According to what I have taught, first thing you need to know what the market direction. Second thing, you need to know the candlestick. That is what make up the market direction is candlestick. Is it going up or is it going down? The third one, you need to know, let me show you on my slide here. So you know that the market goes in a repetition form. You explain this to me. Okay, you need to know that market moves in a repetition form. You explain it to make a video, a short video. I've taught you how to make a Zoom video. Then the next one again, you need to explain to me what is called market moving in an ocean direction. And you also explain to me how many types of market direction do we have. But your main assignment is draw a trend line with 4 hours time frame, with daily time frame. Pick any asset class, insert your period separator, and draw a valid uptrend and down swing, just like I have taught you here. Let me end the recording, then you can ask your question. I'm pausing on of this class. I'll send you the recorded version of this class. Good night.
Okay, sir. Okay. Good night, sir. Thank you.
Okay, yeah.